Hello everyone, absolutely great to have you here watching this video. On this video we're going to look at pound USD as it's breaking out from inverse head and shoulders formation. If you don't know what this formation is like, how to trade it, what to focus on, this is your video. But please do take a moment and subscribe to our channel and give us thumbs up if you like the content here. And maybe you can leave a comment or two below so we know exactly what you think. And also, if there is something that you would like to see a video on, please let us know in the comment section, and we do what we can to incorporate your wishes into our future videos. Now, we have had quite a few successes before, but please don't ever take this as investment advice, because we don't provide investment advice. All the material here is provided only for educational and promotional purposes. If you agree with this disclaimer, then I welcome you to watch the video. Otherwise, maybe not. So if you agree, let's stay here and go to the charts. Okay, so let's look at pound USD in 4-hour time frame first. And if you don't know what head and shoulders is as a formation, I'm going to explain it to you here. So first of all, we are talking about an inverse head and shoulders, but let me show you how it would look like if it was just a normal head and shoulders. I'm going to invert pound USD, the chart here, by going to invert scale. And here you can see that we have the formation here on, here's the first shoulder, here's the head, and here's the second shoulder. And basically, if we take this back to the normal pound USD, we have the first shoulder is here, here's the head, and here's the second shoulder. So it's kind of a formation where the price makes lower lows and lower lows, and then it fails to make another lower low, but instead makes a higher low. And here in between there was a significant rally. So there's something else to this formation, and if you find it difficult to understand and see here, let me just go to the line and close chart. So there's something called a neckline that people pay attention to, and obviously it's not really much more than a resistance level. So in this case, as it's inverted head and shoulders, we're talking about a resistance level, and if it was the normal, then that would be a support level. But now we have the neckline here and it's broken. So market has bottomed out and moved above the significant resistance. So what to look for now? How should we be trading a market after such a formation? Let's go back to the normal candles chart. Okay, now that we have the normal candlesticks chart here, the question is obviously where are the key levels, what kind of indications we can have on if we have momentum still in the market, and where would we like to engage in trading this market. First of all, let me bring back the moving averages here, not because they are something magical, but they help us to see where the momentum is. And at the moment we have the red moving above the blue, which means the fast 10-period moving average is moving above the slower 50-period moving average. As you can also see, the price action is mainly taking place above the 50-period. So this is a bullish setup. What else we can see here is this channel. Basically, you can draw trend lines differently, and people do draw them slightly differently. I try to use a method which gives a sort of approximation of what the price action is like, where the boundaries are likely to be. So as you can see, the market action here is sometimes a little bit outside of this channel over there and over here, but I don't think that's so important. The main idea is to catch the direction of the market and see where the market might find support if it retraces back. And one of the ideas I find useful is the technical confluence. So if you can see that several technical factors are coming together at certain areas, that's obviously going to be helpful because different people focus on different technical things. So some people might look at the moving averages, some people might look at the trend lines, some only focus on support and resistance levels. So if we combine all of those together, then we have better chances of getting attention, getting the levels that most people are paying attention to. So what I'm seeing here is that if we look at the recent resistance levels, I think in this chart it's safe to say that this level used to be quite a resistance for this market, and it is now where the market is finding support at the moment. And should it move lower, then we do have some other levels down here. There's another one that acted as resistance for a little while before the market bounced higher from these moving averages and moved beyond this resistance. But that's another potential level if the market should move lower. At the moment we have buying coming in where we have the 4-hour chart. In the 4-hour chart we have the 10-period moving average there coinciding with this level. Let's look at Fibonacci. So Fibonacci retracements, let's see, the other way around. They are slightly different in terms of starting point and finish point in different charting packages, but the main idea is that if you want to know how much the price retraces relative to a recent major low, then you want to have the Fibonacci tool set up so that you have the smaller levels up here. So the 23.6% is there, then 38.2, then 50%, and so on. So in this case, I've taken this prominent low here and the latest high, and surprise, surprise, 23.6% is bang on with this 130 level. So obviously we have another level here that I've paid attention to earlier. So there was this high of 30.08, 30.07 actually, and the market went slightly below that level. I think the most relevant level here is really this one because the price action is showing that to us at the moment. So let's go to 2-hour chart and see what we have here. Now clearly you can see that the market is moving to the upside. When it was down here, we said that it is likely that the market is pushing higher. This momentum here is suggesting that market is building pressure against this resistance here, and this is exactly what happened. Now we are trading above it, and if the market doesn't go below 130 again, it is then obviously our job to find buying opportunities above 130. I would love to be a buyer a little bit lower, maybe somewhere down here. If the price moved all the way down here, I would love to see if there is price action taking place there that suggests a reversal. But if, that's only an if. I never know, and you never know where the market is actually going to go to. We just have to follow it and take the opportunities where we see them happening. This was a major resistance, so if this level now holds and market starts to move above it, then so be it. We just have to find the best opportunities above that level. Now, how far the market might move from here, I think that's the next question really. So, and there we should consult the sort of longer term Fibonacci levels. Let me take these off to make some space. and I think I drew Fibonacci levels here earlier. Yes, so from that high to this low here, now we're trying to figure out how many percentages the market has retraced from the move down. So we have the move down and the market is retracing, and we want to know how much the market is taking back the same ground that it lost earlier, and if we have technical confluences here in this same area. First of all, we do have something. I think there's obviously a 50% level that's almost at the channel high, but also that 61.8% seems to be significant. We had a market reaction to this level here, so maybe that is worth paying attention to. Let's draw a little target box there, and then after that the next area of potential resistance is there. So I want to draw a line here to remind us that yes, this high coincides with 78.6% Fibonacci, and this area here is coinciding with that low. It actually, I think, yeah, that makes sense to have it here. That's 61.8%. And obviously the market needs to move above this channel high in order to quickly move to these levels. If it's going to take longer, then we might see some consolidation here and then the market moving higher after that. But as usual, we don't know the future. If there is, for any reason, more weakness coming into this market, then I think we should pay attention to these lows. I'm going to go to the 4-hour chart so that it is easier to see the levels I'm referring to. Here we are fairly close to the 50 period moving average, which is close to the channel low. And then again, we have another potential level here. So these are key levels because they are key supports coinciding with Fibonacci's, but or some other technical factors like the 50 period moving average and the channel low. But if the price goes there, we obviously will have to reevaluate the price action there and not jump in blindly buying the market there. But as always, markets often turn from key levels, so we just need to see if there is price action supporting our thesis. And I think that's it from me on this pound USD. If you want to have more analysis on this pair and some other markets too, go to TIOmarkets.com/analysis. And until then, I would love to see you trading safe. Never take trades without stops, and always have a reasonable position size so that if you are wrong, and like me and you, everybody else trading the markets is wrong every now and then, you need to be able to sort of weather through those periods when things don't go exactly to the plan. You want to minimize the losses when you don't have the market, the wind, or the sort of the setups and momentum on your side. And then you minimize the losses, you minimize the damage to your account, and then are ready to move on once the market starts to favor your strategy again. So thank you for this, and I look forward to seeing you on the next video.